All right, here we go. I'm going to say it straight here, guys. First time I've ever used this software. Michael, how can I tell if people are actually there and how can I see their comments?
You should see some numbers ticking up, probably in the top left of your screen, and
Okay,
you have a comment
I see where we're
section
going now.
on the right.
Awesome.
Yep.
All right, well, look, welcome to episode 1. So this is a brand new concept that Michael and I have come up with. And the intention here is to step away from the stage, step away from what most people see about development and actually get into the nitty gritty and see what it's really like. So you get the versions in the content, you get the versions on the reels on social media. You tend to see the highlights, you see the exciting part, and all of those are real. Well, I hope all of those are real that people are sharing. But then there's all the stuff behind the scenes that you tend to never see. You might hear about it, but you don't ever get to see it, never get to be a part of it unless you're actually doing a deal yourself. So that's what Michael and I want to do, is actually pull back the sheets, pull back the covers, and actually allow you to see that. So over the next however long it takes, which might be 8 months, it might be 12 months, it might be 18 months, Michael and I are going to continue to share our coaching sessions, and we're going to show exactly what's happening. We're going to go through exactly what kind of coaching that I'll be giving him on this deal, from figuring out if this deal is worth doing at all, how to finance it, how to run it, how to sell it, how to identify the risks, how to identify the opportunities, and everything in between. It's going to be, well, we're doing it live, so it's going to be unedited. We may carve this up later. Yeah, it might bite me in the backside, but some of you may watch this in the future as a digital product that may have some slide editing, but I promise you we'll leave the main warts and bits and pieces in there so you get the real stuff. So just as an introduction for anyone that hasn't seen me before, my name's Peter Bowman. I'm a full-time property developer. I've been developing for almost a decade. I've been in real estate for almost 15 years, I think, doing all sorts of different things, actively developing for 10 years, and have done tens and tens of millions of dollars worth of transactions and developments. And actually today is a really exciting day. We've had a lot of settlements coming through from a 39 lot sub that we've done, and I've just returned over $2 million worth of investor funds plus interest. So that's been exciting. And I offer coaching in this space, in how to grow wealth through real estate. And Michael's someone that I worked with. Actually, when was that? When we started this?
7 years ago, almost to the day.
Wow. Okay. So when I was very early days, I think I'd actually just left my job maybe. And Michael did something that I think is huge and understated and kind of gives something away about a person. Is he approached me and said, how can I help you in order to learn from you, and you give me some coaching along the way? And this is before I was offering a coaching situation. So Michael actually helped me in the business, added value to me. And the trade-off was that I gave him some coaching about how to identify a good development site. And now 7 years later, here we are. Michael actually now wants to develop this site. So Michael, how about you do a bit of an intro for yourself, who you are, what your background is, and how this has all come about for you?
Yeah, for sure. So I am an electrician by trade, but I've been trading the financial markets for around the same time. I started trading when I was doing my apprenticeship, and I've also just had a pretty big interest in the finance space, real estate investing, for pretty much as long as I can remember. Also been in real estate for around 15 years. I think 2008, 2009 was when I first bought my first property. And since then, just been staying pretty active in the markets when it comes to trading and investing in real estate and crypto. So just keeping my finger on the pulse, which I think is important to do for anybody that's basically has money in the market. So yeah, this deal here came about around 7 years ago. I think it was actually in July 2017. And I remember that catch up vividly, where we were just talking about what opportunities are there and how to go about it. So I'm not sure whether we want a bit of a background about how this deal came about. I guess we can jump into that.
That was just after the planning scheme change, wasn't it?
Yeah, that's right. So there were some changes in the council planning scheme, which I wouldn't have had really much idea about, or I probably would have learnt about it a bit too far down the track, which is where you kind of mentioned, hey, take a look at this development opportunity to do with the zoning changes from a particular area. So I was just basically doing my regular searches for real estate for properties that met the criteria that fell within this zoning. And this property here popped up. I jumped on it straight away to actually go for an inspection, but for whatever reason, it was rented out. The tenants didn't want anybody to see the property, so they took it offline. I told the agent to let me know as soon as it comes back on the market because I was very interested. Then I didn't hear anything. I checked the markets every single day. I checked, realestate.com every single day, waiting for it to pop up, not trusting that the agent would actually call me. He never called me. I saw it pop back up. I was actually on the Gold Coast, and I just rushed back from the coast and put an offer in on the day that it came back on the market. And yeah, was able to get it for, we're going to go through the numbers later. Should we talk about them now? But I was able to get it for basically what they're asking, and then I was able to renegotiate some more money off the price, which I'm pretty sure we'll get to a bit later on.
Yeah, absolutely. And I think what you've touched on there is a really vital point, is that while I know when we were talking then, like one of my big things I was talking about was get your finger on the pulse of the market if you want to buy. But one of the advantages you had created, I was going to say you had, but you created for yourself by doing that work for me, and therefore gaining the finger on the pulse that I had. That's invaluable. Is if you don't spend the time or don't have the time to have your finger on the pulse and be a market expert, well, then you've got to do something to get exposure to that. Whether that be you just happen to know someone, which is very lucky, or if you have to pay someone to get access to that information. Because truth is, that's actually how one of the big ways I got started was when I first started developing. I did a course and someone just happened to mention about these zoning changes that were coming, and I was green as anything. I think when I did that course, I don't even know if I don't think I'd done a development yet. So it was by being in the environment, being in the conversation, I got that tip. I then went and researched it, did a whole lot of work around it, made a lot of stuff ups too, but learned a lot out of it. And because you took that action to get exposure to that information by looking at how you could add value to me, you became the beneficiary of that information, which is, which at the end of the day is kind of how it works, isn't it? It's always about the relationships and about the network. So that's awesome. So this was your second property purchase, wasn't it?
Yep, that's right.
Yep, excellent. Okay, well let's talk a bit more about the property. So do you want to give the guys a bit of a background information? I'll pull up a aerial shot of it while you can tell them a little bit about it.
Yeah, so it was a pretty rundown 3-bed, 1-bath house. It's a corner block, which I think is important for development because you have 2-street access. And yeah, it was basically a house that the owner, he rented it out. It was never looked after. So it was very, very run down. And yeah, I guess that's the crux of it. He didn't want to deal with it anymore, and there was opportunity there.
Do you know where was the owner local, or was he did he live in state or something?
I don't know for sure. I don't think it was interstate, but yeah, I can't confirm for certain on that one there.
But either way, clearly a motivated seller, an emotional seller, which when it comes to dealing in real estate, talking about motivated sellers, that's a huge part of it, because ultimately if you have people that aren't motivated, like we always say, they're willing to wait for top dollar, which if we're doing this as a commercial exercise and we want to buy at value at very least or below market value, you need someone motivated who's going to look for ways to make the deal happen and to look to make it happen fast. Otherwise, things just tend to drag on or just go nowhere. So this is the aerial shot now here. Now, Michael mentioned already a huge plus about this, and that is that it is a corner site. So when it comes to developments, having a corner site is a huge advantage. Now, this is probably a good lesson in that in itself, in that some of the old sayings about real estate don't necessarily always translate directly to active developments. It's different. And here's a couple of reasons why. So when you're buying a property, if you're just doing a buy and hold, buying corner blocks, if it's not developable, is probably not a prime property because people lack the privacy. But when we're talking about developments, having dual street frontage is a huge advantage. So having that corner block is a big plus. Another thing that's very different about active developments versus holding real estate long term is people often get caught up on all of the information around what's happening in this suburb, what's happening in growth, what's happening in jobs, what are the trends, what's the forecast for this suburb, what's happening in the next 5, 10 years. Well, if we're doing projects that last 6 months, 12 months, 18 months, we're not in it long enough for any of that to matter. And sometimes people get really caught up on that when they're trying to choose what the right suburb is. If we're doing active development where we are manufacturing the growth, we're not relying on the market, then all we want to know is that the opportunities exist in the market. For example, you're not looking for subdivisions in a newly subdivided estate where they don't exist, and that the market can absorb what we want to create. And what I'm talking about there is typically not as relevant with smaller projects. But as an example, when we get to larger projects, if you're doing 40, 50, 100 lots, that's all well and good. But if you're in an area where land only transacts, maybe 2 blocks of land sell every month, well, that's going to take you a lot of months to get through 100 blocks. So the absorption rate's not high enough. But ultimately, in this area here, corner block, great. We know the suburb could absorb the stock because it's 2 properties that we're going to be creating, and it's a good suburb. So what else stuck out to you about this one, Michael? Why did you get this one?
Oh, to be honest, I kept it pretty simple. Had the good zoning, had the corner block, motivated seller. That was pretty much all there was to it. I think one other big thing was the position of the house meant that the house could be kept and there wouldn't be extra costs to move a house to be able to split the block up and make use of the backyard.
Yeah, good one. I think that's a lot of people talk about, I'll just move the house or lift the house. Guys, when you're starting out, if you can avoid shifting houses and lifting houses, please do. It's one of those things that is famous for blowing out in costs. And there's a lot of, I'd say, false information or inadequate information around as to what that costs. You hear numbers thrown around about, it costs you $30,000 to raise a house. Well, that might be true in part, probably not even that anymore, but it's not the whole story. And what I'm referring to there is, okay, maybe it costs you $30,000 or even $40,000 to get the company to come and physically lift the house and stick it up on stumps for you. But you've now disconnected all the services. All the services need to be reconnected. You probably need new street access or new parking. You probably need to close in downstairs or build in downstairs. There's a whole lot of flow-on effects that come from that raising. I've never heard of anyone getting it done for less than 120 grand in total. And that was keeping things really basic. So yes, huge plus that the house is in a great location. So there's that possibility of a free block of land at the back, which is a huge plus. So let's talk about the zoning. So now I know what you're referring to there, obviously, but from what you remember, I know this is a while ago you bought this one, but from what you remember, why is the zoning on this one a positive?
Well, I guess the zoning allows for the size of the block to be less than what it is. So it's around a 600 square meter block. And the zoning, I think, allows properties to go down to even less than 200 square meters per block, depending on the area. So, yeah, again, that's about all there was to it.
Yeah, spot on. And so just for anyone that's just tuned in, so when Michael picked this up, this was quite soon after the zoning was changed. So we talked about this new zoning that had come in. There was a planning scheme that was in the works. It had just been introduced. A lot of people didn't really understand it or know how to utilize it properly. And that's where the opportunity existed here. So with this zoning here, Michael's right. You can do blocks as small as 200 square meters. Terrace lots are very common in it. I've just done a bunch which are 7.5 meters wide, about 260 square meters in total. And in a sense, people get to build their own townhouse. Look, not for everyone. Some people love it because it's very affordable and there's nobody corporate. And that's the big plus for them. So they have that small living with a small yard, but nobody corporate, and they've got their own title. So the zoning in this case is called next generation zoning. So do we have 7.5 meter frontage on the new block we want to create in the backyard? Absolutely. Are we going to be in excess of 200 square meters, even though that's not necessarily required? we're definitely going to. The block itself is just over 600 square meters. And as you can see, even without getting out any measuring capabilities here, if we draw a line across there, that's plenty of space for the house. And then we've got the backyard, which is probably going to be around 300 square meters. So what I'm going to suggest now, so for the guys that have just tuned in, so the intention is to run this like a normal coaching session. And that's what all these, we're going to take this development right through. So this is a current development. This is not looking back in time. This is not giving you a highlights reel. This is me coaching Michael through this development now. I helped him find the site and buy the site a number of years ago. He didn't want to develop at the time. He just wanted to lock down a good development site. Now we're going through it as an actual development. So we're going to share this warts and all. So let's have a look at some of the risks and opportunities associated with this one now. So we already talked about the zoning. We've talked about the dwelling location. We've talked about it being a corner block, all big positives. So now I just want to raise to you a few things that come up to me as potential, not necessarily risks. These are challenges. And these are the things that always come up in development. But the thing is to identify these as early as possible, especially during due diligence before you go ahead with the site. So you can figure out if there's something you can work with or if there's something you can't work with. So the first one here for me that jumps out is off-street parking. Now, if you're going to split a block, if you're going to create more lots, more titles, one of the things council is always going to look at is, can you provide adequate off-street and compliant parking? Now, I believe there'll be a solution on this one, but it is a challenge in the sense that if we look at the front there, I'm just going to highlight this here. So if we look at the distance here from the house to the road, there's not a whole lot of distance there. And different councils have different rules as to how far back the off-street parking has to start. As an example, some are willing to have a carport come right up to the boundary. That's been very common in a lot of councils for a long time. I know for a fact this council no longer allows that. So you don't actually have all of that space between the house and the boundary to do a car park. They used to allow it. For whatever reason, they changed their position on it. So what we will need to figure out, or Michael, what you'll need to find out from a town planner is how can compliant off-street parking be created on this? Now, there may be a solution on the front here. There may need to be an access at the back, or if there's space down the sides of the house. I don't know that there's enough space down the sides, but these are the things that we'll need to look into, find out from the town planner what are the exact rules we need to work with, and figure out how you're going to provide that adequate off-street parking. That makes sense?
Yep.
Awesome. So the next thing is street trees. Now, I don't have a, oops, I don't know if my screen just went blank for you guys. Give it a second. So I don't have a street view right now, but we'll share an episode, I think, when we actually go out on site. But I'm looking here. I can see one street tree here. Looks like another whole bunch of street trees along here. Now, a lot of people just tend to think you can just go and knock down the street tree and off you go. Not so simple. The councils see street trees as an asset. They quite literally have a register of their assets, their trees. So to remove any of these trees, if it's needed, that's a whole process in itself where you'll need to apply to council to get permission to remove a street tree. If you remove one without their permission, it can be a pretty hefty fine. So that's one of the risks that I see. One of the challenges is have a look at, can you provide driveway access to the new rear block as the trees currently are, and potentially also access to the to a off-street car park for the existing house if we had to behind without removing street trees. And if you do need to remove street trees, better off starting that process sooner rather than later. Now, on that topic, speed bumps like that we can see here and drains, there's always required setbacks from these kinds of things. So these are all, everything I'm coming to you with at the moment are more or less all questions your town planner is going to be able to articulate for you exactly where things are sitting. But just flagging it is what we'll need to look at is the potential driveway here for a car park behind the house. Is that going to be impacted by this speed bump? And I don't think we'll have an issue with this back block, but just flagging that as something to find out from the town planner early on. All of these things, I believe, can be overcome. But again, better off finding out now exactly what we're dealing with. Any questions on that?
No, just making some notes as you're covering these different risks.
Oh, actually, let me share these notes with guys. So that's, let's see, can I share that as well as this screen?
No, I think just one at a time. We can put it up at the end.
Yeah, that looks to be the case. Yep. I'll put that back on. Yeah, so we'll share the notes at the end, guys. Okay, so I don't see a specific issue with this at the moment, but just flagging that whenever you're dealing with an intersection, and obviously a corner block, you're always dealing with an intersection, that can have impacts as to where the council will allow driveway access. So at the moment, the driveway is here, and it's right near the corner. There's a possibility the council may request that to be changed and moved away from the intersection. Nothing we can do about it, but that's just something to flag early on. All right, what else have we got here? So dial before you dig. So that's something that you'll need to do. So guys, when you're doing a development, one of the first things you do is a dial before you dig search. Now, typically that's free, regardless of which state you're in. But what that's going to show you is where your services are. So where your water is, where your sewer is, where your stormwater is, where your electricity is, your communications. Is it Telstra or is it NBN? If NBN is available, they'll always want you to connect to NBN and not Telstra. Is there gas in the area? So all of these things we need to know. If there's gas, that can always create some interesting things. I've received, I don't know how many phone calls from doing dial before you dig searches because they're just scared that you're going to start digging and hit the gas lines. So a dial before you dig search is going to give you an indication of where the services are, and most importantly, can it be serviced? So right now we've talked about this block looks like it can be subdivided because of the zoning, and there is the space and there's the location of the house. What we haven't talked about is physically, can it be serviced? Because the zoning means nothing if it can't be serviced. So that's something we'll need to, you'll need to look into before the next episode, is getting a dial before you dig search done and finding where the water is, where the sewer is. Now, electricity, we can see a power pole right there, actually, in that shadow. So there's a power pole there. Now, obviously, it's a inner city suburb, so we know there's electricity. But it's a question of how is power getting delivered to the property. I think we can actually see a faint line going across there. So to me, it looks like it's overhead power currently.
Yep, that's right.
So more than likely what's going to happen there is the council will want you to change it to underground power. Now, the unfortunate thing there is that's bloody expensive. So more than likely there'll have to be a road crossing, and then you'll need to run it down the road to both blocks, would be my guess. But we'll confirm that when we go through the dial before you dig, and do that probably in episode 2. But again, none of these things are necessarily deal breakers. They're just things that we need to be real about the challenges we've got and what they're going to cost. So water and sewer, we're yet to find out. Stormwater on this one really shouldn't be a challenge because it's a relatively flat block, but gently slopes to the road, and we've got the 2-street frontage. So more than likely, the legal point of discharge where we're going to get the water off the site is going to be to the road. So that's always a good thing. The big challenge is if your block slopes away from the road, and then you've got to figure out a way to get the water off your site back to the road without impacting any of your neighbouring properties.
Just on that last point, Pete, the power likely needing to be changed to underground, is that almost a certainty?
Yeah, about 90%.
Yeah.
Yep. Yeah, there used to be some cases where you could get a, I had this on one of my earlier deals where we could get a letter from Energex and provide it to council stating that it was actually Energex's preference because it was the norm in the area to keep power overhead. That's the last deal I've ever heard of that happening on. It seems now, regardless of how normal it is in the area, the council just wants it underground. So yeah, I'll be very shocked if we get away with overhead power. So basically what happens there is 2 options. The road gets closed and we basically dig a trench across the road, put the power across. tunnel boring can be a possibility, but it depends on where the other services are in the road and that sort of thing. You ever heard of tunnel boring?
No, but if it's what it sounds like, it should be pretty handy.
It kind of gives its name away. The thing is, and I'll be honest, it was quite far in that I actually learned this, but it's a fairly dumb technology, and I don't mean that in that it's useless, but it basically just goes straight. You don't have any control over go up, down, sideways, left, right. So it's kind of going to find its own way across.
Right.
So why that can be a bit of a dumb technology is if you know there are other services going across the road or in the footpath, then tunnel boring may just not be an option because you're not going to be able to navigate around those other services. So then in that case, it just becomes an open cut and we deal with what's there. So again, look, it's doable. There shouldn't be any issues there. But it's just a more expensive thing, but it's pretty common these days. So that's mostly it from that perspective. The other thing that jumps out at me hugely is the amount of trees in the backyard. So I've got to be careful how I say this because we are doing this live, but I'll say it this way. When I submit DA applications, I prefer where possible that my sites are clear.
Understood.
Now, that being said, got to be careful not to break any rules. Definitely always need to do searches to see if there's any protected trees or anything like that. You don't want to go against anything like that. That will be very expensive. But if there is nothing there suggesting that trees, if there's nothing there saying the trees can't be cut down, I prefer to submit my DAs tree-free.
And how do you find out if the trees are protected or?
So there's a couple of different searches. There's some state government websites where you can do some searches there. And there's also the council website will often indicate it as well. There's a few different registers depending on the areas as to what can be done. That's I'll provide that to you offline. I'll need to look up the web addresses and bits and pieces. Actually, easiest is actually just when you talk to the town planner, just ask him that question as well. And they actually have access to better databases than we can anyway. Street trees and all right. I think that's all we need to go on the operational side. So I'll bring up that your notes there. Let's just check what you've got there. So we've got zoning, space, risk and opportunity, off-street parking, street trees, speed bumps and drains, intersections, dial before you dig, backyard trees, council website, protected trees. Yep, excellent. Okay, so the next step here is what we want to look at is feasibility-wise. Is this project actually worth doing? Now, in this case here, obviously this is something you bought a few years ago, which is, as far as the feasibility is concerned, is definitely going to be a positive because you've experienced some growth over the years. And I think this is a really good example of a lot of people do courses and education about development, but don't necessarily want to be an active developer. This is actually a good demonstration of that's fine, but there's a lot of value in learning how to identify good development sites because they will appreciate a lot better than a non-developable site. And whether you choose to develop it yourself later on or not, big opportunity, which, look, I haven't done the numbers on this yet, but just knowing what's happened in that area since you bought this, I suspect the feasibility will be a pretty healthy one. Any other questions before we move on to that, mate?
No, I think that's a pretty good kind of summary of the main things that need to be known from day one, I guess, to get the feasibility as accurate as possible. Yeah.
The other thing which we'll need to have a look at when we're out there is where the closest fire hydrant is. That's not something we'll be able to see from the imagery. So when we do the site visit, we'll have a look at where the closest fire hydrant is. Number one, that it's going to be close enough to service the property, which I don't believe there'll be any issues with that being this sort of a suburban area. But the other thing we need to look at is it in a place that's going to obstruct potential new access ways, new driveway. So that's just a note for something for us to look at when we're actually out on site. All right. Okay, let's have a look at a feasibility. All right, so off you go, AI. All right, so this, I'm just using the template that I provide my subscribers. So this is a basic feasibility template, which this will do the trick anywhere up to, well, about 5 lots. And I say 5 lots because you're not building a road at that point. So this sort of feasibility template will work up until the point where you're building a road.
Yep.
And I've just
Just
realized,
if you want that up on the screen, just
I was
swap
about
your
to say,
screens over.
I've just realized that no one can see it. There we go. Okay. So yeah, good for up to the point where you're building a road. So let's go through this now. It'll be set up a little bit different because you have owned this for a while. But so settlement time frame, just have to think this through, because normally what we'll do there is obviously put in the contract settlement time frame. You already own it, so we'll go 0. Oops, I just deleted the purchase price. That was at 900,000. Okay, so lead-in period is basically the time between now and when we're going to actually start construction on site. Now, from what you know already, I'll give you some coaching around this, but what would you expect the time frame to be between now and when we actually start work on site?
I would have assumed at least 6 months.
Yeah, at least. Look, I think 8 months is probably a good measure. It doesn't have to be that long necessarily on this sort of a project, but again, always better off being a bit conservative, because by the time your consultants pick this up, current timeframes with engineers, if they start work on anything in the next 3 to 4 weeks, that's a surprise. So, there's a month gone in waiting for the engineers there. Let's say a month for them to do the work. So 2 months before you're even looking at submitting your DA. Town planners tend to be a little bit faster. But I would say, 8 months until you actually are doing work on site is probably a fairly good estimate. Construction on this one really shouldn't be long. Physically what needs to be done there could easily be done in 3 months. Given it's your first one doing any construction, I'm going to put that at 4 months, just purely because there's always going to be those challenges that come up or things that you don't necessarily foresee, or just little surprises. So there's always plenty to learn on your first one. So I'll say construction of 4 months. Really, what have we got to do here? We've got to do water. We've got to do sewer. We might need to construct power. And we've got to probably going to have to do a crossover, but there's pretty minimal construction, which is good. Titling and settling period. So that's the time between when you actually finish your construction and then get plan sealing and then get your titles. So what do you think would be a realistic time frame based on your knowledge so far from construction end to getting plan sealing? What would you think?
Maybe 3 months.
Yeah, look, very reasonable. You can probably do it faster, but again, thinking that it's your first one, probably not a bad way to start. Allowing about 4 weeks to get all your paperwork and everything in order. Once you submit, council has 4 weeks to assess it and come back to you. They may then also come back to you with more questions and asking for other supporting documentation, which again means going back to consultants and getting other things. So look, I think 3 months for that would be plenty. And then once you've got plan sealing, allowing a month for titles is more than enough. So I'll change that to 4 months.
And when you say consultants, are you referring to town planners specifically, or are there other consultants which are needed to get the project over the line?
Oh, there definitely are. We'll go through that shortly. At that end there, it's more than likely going to be stuff from your engineers. So with the project time frame, basically when you start from the very beginning, the main person that's kind of running the show and is your key person is your town planner. But then as soon as you get the development approval, just the initial DA approval, then it kind of has them pass the baton to the engineer, the civil engineer. Then they become the main person because now you've got to get operational works approvals. And then once you actually start work, so once you get those operational works approvals, once you start work, it's the engineer that needs to sign off on most things. So there's in the middle there's kind of the passing of the baton from the town planner to the engineer, but there's still going to be the town planner will still be somewhat involved as you go through. But yes, plan ceiling at the end, mostly it's going to be your engineer and your surveyor will be the two most commonly used consultants.
Alrighty, just making some extra notes here.
That's good. Don't worry, when we get there, I'll give you a bit more detail there. So with this one here, so purchase price, what did you buy it for again?
$275.
That's hard to think of, isn't it? 275,000. Oops. Okay, so purchase price was 275,000. Now you'll notice in the template here we've got a GST column. The way that we've set up this template, you put the purchase price as no GST. Now that's technically not actually accurate because when you're creating and selling land, you'll have to pay GST at the end. It's just the way this spreadsheet is set up is that's the way to do it. And we've got a note in there to help you with that. So I'll give you access to this one afterwards because that way you can update it as more accurate figures come through because this is obviously just going to be a first run feasibility. Now, we haven't got the dial before you digs yet. So sewer and water, we don't really know where they're going to be yet. Now, if they're in perfect locations and we can literally just plug and play with them, we might only be talking $3,000 each. Now, how often does that happen that both services are just in the perfect location where we can just plug in? Certainly not going to bet on it. So look, I would suggest, at least at this point, that we allow 10,000 for each service. Now, again, these are just rough numbers at the moment. Why 10,000? Purely from experience is that's kind of just a round number that allows for something a bit more than a standard connection where we might need to run it a few extra meters and that sort of thing, which is fairly common.
Okay.
Stormwater, I don't foresee us having any real costs associated with stormwater. Because from memory, this block slopes towards the road generally, doesn't it?
Yep.
Yeah. Okay. So really shouldn't have much to do with stormwater in that regard, which is good.
And quick question for you, Pete.
Yep.
So we're calculating the costs just for the additional lot, correct?
No.
This is going to be for both lots.
Yeah. Per additional lot, yes, you are correct. Now, I'm just thinking with this one here. Now, again, once we do the dial before you dig, we'll have a better idea on this. There can be instances where you do need to provide connections for the new connections for the existing one, depending on how it comes in. But we'll work on the assumption that that's not the case.
Okay. So, and by that you mean the existing lot will remain as is with no additional costs?
Yeah, the existing house, we hope, can just remain connected as it already is.
Yep.
Yep.
And if it can't, that would be the case of needing to vacate the tenant?
Not necessarily, no.
Okay.
No. Basically, what we'd have there was we would do the construction where we'd basically bring everything up to the point of connection, and there would be a day where those connections would be disconnected for a few hours. Because basically just line everything up and then disconnect, reconnect. So there might be a few hours where the water's off, a few hours where we tell them not to flush a toilet because we're changing the sewer, those sorts of things. But no, there shouldn't really be any reason on this one that you should have to vacate the tenant.
Okay.
At least that I can see at this point. Now, power and telecom. So this one's a bit more. I think there'll be some extra costs here. Like I was saying, there's the high likelihood that you'll need to bring the power across the road. NBN, we obviously don't know yet, but with the power, when it's a road crossing, you can be looking about $25,000 to actually do the road crossing. So that's what I would suggest is used as a budgeting number for the time being. Sounds like a lot just to bring some power across the road, but it's all the flow-on effects. It's, okay, we've got to shut the road. We need traffic control. Traffic control is an absurd cost for what they do. No disrespect to any traffic controllers on here. But then you obviously got to open up the road. There's a whole bunch of permits, and there's actually the physical construction that needs to happen. So that's what I'd suggest as a provisional sum. Obviously, we'll get quotes to get that closer. Now, house demo on this. Good news is there shouldn't be any house demo. Again, one of the awesome things about corner blocks is no house demo. So that one we actually get to delete, which is fantastic. Now, just check tree clearing. We've got something down there. We'll have a look at that soon. Erosion and sediment control. I always just like to add a provision in there, even for a 1 to 2 silt fencing. Do you know what a silt fence is?
No.
That's okay. I didn't on my first one either. But I'm going to tell you a story because this is going to teach you why you need a silt fence. On my first ever development, the day we started earthworks, the following day, we had 1 in 200 year rainfall. Now, my block slopes 12 degrees from left to right. And the neighbor on the lower side was the neighbor that really didn't like me because she didn't like that there was a development happening. And you can have a guess where all of our topsoil ended up.
Yep,
because I hadn't heard of a silt
Murphy's
fence.
Law.
Yeah. Now, the next development, I had heard of a silt fence, but I was being a tight ass. So I installed it myself. And then we had 1 in 100 year rainfall the day after we started earthworks. So all of our topsoil ended up in the lower neighbor's pool because my silt fence just got washed away. So guys, for Michael, anyone watching, put in silt fences, get the experts to do it. They have machines that do it properly and do it very quickly, and it's not that expensive. So erosion and sediment control on this one, I think, should be about a silt fence, and that's about it. Rear access driveway. So no need for one of those on this one. Earthworks, at least at this point, there's nothing indicating that any earthworks need to be done. It's a nice flat block, but with a gentle slope to the road, so drainage shouldn't be an issue. Again, when we do the site visit, we might change our perspective on that, but at this point, I think that should be fine. Any reason you tend to think that there should be earthworks?
Yeah, I think there may be. I think we're going to need a retaining wall. Where the house sits, it's relatively flat. Then it does step up probably about 0.5 meter to where the rear block will be. So I'm assuming, I'm pretty sure this, even just for a better block, I think a retaining wall is probably going to be necessary.
Okay, so the new land we're creating sits higher than the existing house. Is that right? Yep. Okay. All right. So yeah, given the size, I think you're right. It probably is going to make it much more sellable to retain that and make that a nice benched block. All right. Not having been to site, hard to say. But look, we'll just put an allocation in there for 10 grand because if you've got machines on site, you're not going to get much done for less than 10 grand. And then we'll put an indication in for retaining walls as well. Did you say it steps up about 1 meter, is it?
A bit less.
Bit less. Okay, well, that's good news.
Maybe around 0.5 meter or so.
Okay, good news. If the retaining wall is 1 meter or lower, we don't need engineering for it. If it's above that, then we need engineering for it. So that's a big positive. It's a cost saver. Now, footpath. Good news is footpath is on the other side of the road, and it does not look like there is a footpath anywhere else on your side. So it's unlikely that you will need to put a footpath in, but I'm only going to say unlikely because I've seen council do some pretty weird stuff when it comes to footpaths and having people put footpaths in where it really doesn't make sense to put one in. Best I've seen is a street that had 0 footpath on it whatsoever, and they had a protected tree at one end, a protected tree at the other end, and they made them install a footpath from that protected tree to that protected tree. How is that footpath ever getting connected? Anyway.
Yeah.
So yes.
Some of the things they do makes you wonder.
It does. So yes, unlikely, but never say never. So footpath, I think we can zero out. Seepage pit. Do you know what a seepage pit is?
I think I do. But
crack.
That's the pit that would go into the street where the stormwater goes.
Look, you're close. So a seepage pit is actually for when your block slopes away from the road. You're not allowed to have water on your site just rush onto another site, onto another neighboring property. Now, most councils don't allow seepage pits. Most councils, you either need to raise your block to have the water flow off the block to the road or pipe it somehow, whether it be to a stormwater pipe that's deeper down that you can access or through a neighboring property if they give you permission. But this council is one of the few councils that still allows seepage pits, which basically means they look where the water is naturally going to flow on your block if it's flowing away from the road. And then they basically dig a big hole, fill it with gravel, more or less, so that the water naturally flows in there and then gradually seeps over the boundary so it's not creating a flood onto the neighboring property. So yeah, most councils, very few councils still allow that. Moreton Bay Council is one that still does. Most likely because they're a regional council. So seepage pit, you're unlikely to need one, which is a positive. Turfing, look, the turfing, I would always recommend having an allocation put towards that because the fact is you're going to tear up the footpath with machines. So again, without having been to site yet, I'm just going to put an allocation of $1,000 there, just so we've actually got something across it, and we can have a better look at that when we get there. Retaining walls. So if I bring up that, so you're suggesting we probably need a retaining wall from this side to that side. Is that correct?
Yeah, correct. And I would also think we would need one on the boundary where the vacant block or the new block is going to be. So towards the top, if you move your cursor up, other end, yeah, along there, because that one there is a retaining wall there, but it'll either need repairing or replacing.
Okay. And how high do you reckon?
That one there is higher. That'll be over a meter.
That'll be over a meter. Okay. Look, if that one's, are we talking like 1.2, 1.3, or are we talking like 2 meters?
Testing my memory. Probably closer to that 1.2.
Okay. Well, look, I'm just going to work on the assumption that we're averaging a meter because here we're a bit under, here we're a bit over. So based on that, we're going to work on about 30 meters of 30 lineal meters. And we'll also work on 30 square meters because we're sort of a bit above, a bit below 1 meter, pardon me. So in here, I've given you a price guide of $400 per meter up to 1 meter high concrete walls. So what did we say? We said 30. So all right. So we'll allow for 12 grand of retaining there. Fire hydrants, I don't believe you'll need one, purely just because we're doing a 1 and a 2 in an already built up area. So the chances of a fire hydrant not already being close enough is very, very low, but we'll check that when we're on site. What's the fencing like on site?
Very average. I'd prefer just to redo it all, to be honest.
Fair enough. So look, with fencing, this is always a good question because I've seen people go to the extreme with fencing where they're really not getting their money back. So with fencing, what you want to be looking at is what is the accepted norm in the area. If you're in a really sort of affordable housing area and the norm is still just the old cyclone chain wire fencing, then you don't necessarily have to do it. But if you're in an area where the norm is at least a 6-foot timber fence, then to not do it is possibly underselling because people will factor it in. Now, the asterisk on that is if you sell your land before you've actually finished the development, so you sell it off the plan, you may never need to build the fence. So that's just something to be mindful of because typically when you sell the land, people will have fencing built into their house and land package with the builder. That's a standard inclusion. So if you sell the land and then just build the fence anyway, you've actually just done that for free because they're not paying you any extra for it and they've already got it factored into their build. So just something to, I guess it's somewhere where people kind of give up about 10 grand without necessarily having to. So we'll factor it in, but I'd highly suspect that this block is sold prior to us getting titles on it. So where are you thinking the fencing needs to be done? Basically all the way down the boundary and then a separating fence? Yep. Okay, so what do we got? We've got 40 meters, 15 meters, plus another 15 meters. So we've got 70 meters of fencing.
Probably do the whole lot, though. Wouldn't you think it'd be a better end result? Or you're still saying selling it? Would you factor to fence the whole lot?
Well, okay, so question for you is, are you planning on selling this house or keeping it?
Potentially keeping the vacant lot and selling the house.
Okay. All right. So these are all important things to think of now and we can factor in. So look, if you're planning on selling the house, given that it's on a corner, yeah, I definitely agree. Fencing the property is probably a good idea. Given it will be a small lot, we'll have a look at whether fencing it all 6 foot all the way around is necessarily the best choice because it might make it feel a bit enclosed. But then is this a main road here or is it just a thoroughfare?
Thoroughfare.
Yeah. Look, I think when we go out on site, we'll have a closer look at that one. But look, we'll budget now for fencing the whole thing, and then we can make that call going through it as to what's going to achieve the best sales result. Okay, so we got what did we say we got? We got basically 15, 40, 55, so 110 square meters plus across here. So we've got 125 square meters, not square, 125 lineal meters of fencing. You can see we've given you a guide of 110. So equals 110 times 125. All right, so about 13 grand of fencing.
Go $120 a meter, because if I'm going to be keeping one, I'd probably prefer the color bond.
All right, no worries.
Not a huge difference, but
that being said, I reckon color bond has probably gone up a bit from 120 in recent times, based on some recent quotes I saw. But you're right, color bond, for anyone watching this, there's almost never a reason to do color bond unless you are keeping it. People are not going to pay you more for your land because you put color bond there. I've just taken over a development where they, for whatever reason, pushed to have in the DA that they needed to do color bond fencing, and it's for that development, it's like a $50,000 expense. For what? Like, that's $50,000 that they've just donated. So now I'm trying to get the DA amended so that we don't have to do it. Fencing. So tree clearing. Hard for me to say because I haven't been on site yet, but it definitely looks like there's a couple of big trees there.
Yeah, I've had a quote around 12 grand.
Cool. That's just for the ones on the block?
No, that's for all of the trees. So of course I'd need to get the council approval. So that'd be clearing council trees and property trees. Yeah.
Okay, cool. Oh, look, it may end up being a little bit less. I don't think all of those street trees would need to go. But just ones that are crucial to access.
And again, the town planner will be the one to confirm which trees?
Yeah. Basically, it'll come down to where the crossovers are likely to be. Okay. Any other? So what you shared there about the levels of the ground, that was really helpful. Are there any other things that you know of the site already that you think may create extra costs?
How much of the existing house will come into play in terms of where that sits? Does any of that really matter?
How do you mean?
For example, it's got an asbestos roof, the old Super 66 roof. Does that matter when it comes to developing a new site? So nothing to do with the existing house really matters.
No. Oh no, the actual structure of the existing house, no. As long as it's livable, it doesn't really have any impact at all.
Okay.
On that note, that's an important point, which for you, obviously you've bought this already. But for those that are watching this that are looking at buying development sites, a bank will not give you residential finance unless it is a livable dwelling. What can happen there, and this has happened to me, well, once I knew it was going to happen, but it happened because it was basically a shack that someone had put together, which was never an approved dwelling. So no one was giving us resi finance on that. The other one was more of a surprise. It was a rundown place, which we intended to demolish anyway, but you tend to buy these things using investment finance when it's a 1 into 2 sub. It's the cheapest finance. But when the valuer went out there, he actually put in his report that it wasn't livable as it was, because there were gutters falling down, there were unpainted rooms, there was, the deck at the back was falling down. So he actually said not livable. So the bank went, well, we're not going to fund it. So I actually needed to renovate the house to finance it, to demolish it. So just a fun fact, must be livable if you want to get residential finance. Okay, so we'll leave it at that for costs at the moment. So if you have a look there, so total civils, it catches up, 97 grand. Now, I didn't ask you at the start what you thought the civils might be, but for a simple 1 into 2, this is where a lot of people get caught out, is that the things add up. Like, that's 97, that's $100,000 of civils on a very relatively simple 1 into 2. Now you notice all of these are GST selected, which is important when it comes to calculating our GST later. Why? Because they're all things that we're going to be using contractors that are going to charge us GST. Now, the caveat to that is your sewer and your water, depending which council you're in, they may dictate that their utility provider, or the utility provider may dictate that they do the work. And then there may not be GST, but we'll assume that there is. Okay, so actually what we need to factor in here is the reno that you've already done. And what was the reno cost?
30,000.
Cool. Okay, let's have a look at the soft costs. So who are the consultants we need? What are the reports we need? Basically, what do we need to actually get the permits? So stamp duty is a given. Now, I just put 4% on there. That's actually overstates it a little bit. But again, I'd rather my feasibilities be a little padded. Legals on land, an estimate of 1,200. Now, obviously, some of these you've already paid because you've settled them. Now, we are creating a new block of land. So council headworks is going to be a thing. In that council there, that has now moved up to about 33,000, which is becoming a bit more of a regular. Now, in here, you can see I've provided some provisional sums. So surveyor, 2,200. Now, electrical engineer, you will most likely need design. So why I say that? So if you had overhead power straight in front of the property, or you had underground power straight in front of the property, you wouldn't need this. They just plug and play. The fact that we're quite confident on this one that the power is going to have to come underneath the road and then be run down the footpath, that's going to require an electrical engineer to do a design and get it approved by Energex and NBN. So I would expect that there will be design there. And you can see there the provision we've put in there is 13K if design is required from a electrical engineer. Any questions on that one?
Nope, makes sense.
Cool. So town planner, these are all provisional sums that we've got in the basic feasibility. Oops, my screen's just flicked. So town planner, 6,600. DA application, negotiated decision. I don't expect that there's any reason why we would have a negotiated decision here. That's more for when we've got applications that we know we're pushing the boundaries and we're expecting a bit of a battle with council. Plan ceiling, pegging and survey plan from the surveyor, civil consultant, so that's your civil engineer. Council water and sewer operational works fees, tree retention plan. I don't think you'll need one there. That's normally for bigger sites where the council basically gets you to survey all the trees and tells you, these particular ones need to stay. And that's also why I prefer to lodge my DAs tree-free where possible. And then some provisional sums here. These are often things that people don't include in their feasos because you don't think of them early on. But again, it's like kind of like the death of 1,000 cuts. You're better off allowing for all these bits and pieces because they add up. Valuations, titles, insurance, accounting, bookkeeping, traffic report. You may need one of those because it's on a corner. Actually, I'll put an allocation in that for that.
Put it in just to be safe.
I'd say, it's 50-50. Advertising, marketing, one often left out of a feasibility. You want to be heavy-handed on your marketing budget. Here's what often happens. Market is good. People start a development. They go, it's a hot market. I can sell the stuff. Well, the thing is developments take time. And often if you're entering a development in a good market, you're exiting in a different market and vice versa. When the market,
if I were to be keeping the house, how soon could I sell the house and just keep working on the development of the new lot?
Great question. So because of the size of the development, the Land Sales Act doesn't impact this as much as it does a bigger development. So under 5 lots or 5 lots and under, as soon as you know what this is going to look like, and I'd suggest you could do it on a mud map. I would suggest you're going ahead with this. So one of the actions for you is to get this the site, a detailed survey on the site. And when you get that done by the surveyor, you can have them do up the intended plan. As soon as you have that, you can start selling and you can get an unconditional contract on that. So quite literally, you could have an unconditional contract on this in a couple of weeks.
Right.
Yeah, because if you order the survey plan tomorrow, it'll probably be done in the next week. And if you had a buyer already lined up at that point, that's your legal requirements ticked off. There needs to be a contract there that allows for all that stuff. But that's what the solicitor will draw up, selling it off the plan. And you can lock in an unconditional contract. Well,
Very cool.
conditional of titles, but unconditional in all other regards.
Right. And the settlement would have to be upon
Post
the
titles.
creation of the new lot. Yeah.
Yeah. Yeah. It's normally set up so that it's 2 weeks or 3 weeks post notification of titles.
Got it.
Disclosure statements you won't need because it's 5 lots and under. That's referring to the Land Sales Act. Project manager, do you plan on paying one?
Potentially.
Okay. Any
We'll
ideas?
put a provision in there.
Have you spoken to anyone? Got any quotes?
No, I haven't. Wouldn't have a clue about.
I'll put in 10 grand just so we've got an allocation.
And if we don't use one, that's just a bit of extra, just kind of put to the side in case of contingency.
Yeah. Yeah, if you always better off adding the stuff early days. It's much better to reach the end of a development and go, oh, wow, we didn't use all of our contingency and we came in above budget or ahead of budget, than reaching the end going, oh, geez, it was a great result. We made 300 grand, but I expected to make 400. It's weird how the same results set up in different ways at the start can give you a very different experience at the end. Now, I know you said you might keep one of these, but I'd suggest for the feasibility, we just factor in sales of both just to give it a true reflection.
Yep.
Now, I know we've got some work to do on this, but from what you know in the market now, what do you think the house could sell for on a 300 square meter block?
I just wanted to double check my notes on that, but I was thinking around the probably 600K mark.
Okay. So an estimate at the moment is good enough because obviously there'll be a lot of work to do to nail that down. The block of land, what do you think that's worth?
I'd say around 450.
Okay. For those watching, obviously this is the first run FISO, so I'm not particularly worried right now about nailing Michael on how accurate that is. That's something we'll do in a later episode when we actually go in deeper into how to establish your end values, because that is actually the biggest risk when you're getting into a development, is what your exit sales, your exit prices are going to be. Getting that wrong by 10% or 15% is a huge thing. Being out on costs by 10 to 15%, it hurts, but it doesn't destroy the development. So sales exit numbers, your sales prices, is arguably your most important thing coming in. And unfortunately, it's the thing that people tend to do most blindfolded or very optimistically. Okay. Interest rates, look, I'll put that at 6.5 for the time being. And are you funding it with cash yourself, or do we need to look at getting an investor?
I'll be funding it myself.
Okay. All right. And land purchase, I've allowed for an 80% lend on the land purchase. Although, really, I mean, if you wanted to, you could probably refinance that and pay for part of the development by refinancing the house.
Yep.
It's actually not a bad idea, really. No money down deal.
That's it.
Okay, let's have a look. Well, that's a pretty compelling ROI. Now, obviously, what we haven't factored in here is your holding costs over the years, because you have held this one for a little while. But based on those numbers there, it obviously looks very well worthwhile doing. Now, can these numbers vary? Absolutely, they will vary from this point. What we've got factored in there as a basic is a 20% buffer on the construction. So that's calculating from your civils. Yep. So we've got a $25,000 buffer in there, which for this type of project and for the complexity of this project, I think that is ample, particularly given that we've been very realistic about going through the costs. We haven't gone and tried to skimp and save and squeeze out and like try and think of all the things we can't put in, which is a very unhealthy way to do your feasibilities. We've gone through and gone, what are the costs we might have? Let's include them. So that to me, I think is a very reasonable buffer to have in there. So I know you were hoping to make 500 grand out of this. So I hope you're not experiencing a feeling of disappointment right now.
No, not at all. We've got some pretty good buffers in there. And I guess it's going to be a bit more clear once we go through the comparable sales to get a better indication of what the end prices might actually be.
Yeah, absolutely. And look, that's going to be one of the biggest things I give you to focus on coming out of this is obviously we've already got things in there about talking to the town plan, the dial before you digs and all that sort of thing. But yeah, like because you already own this property, obviously the risk here on the sales is less. You're already in. More to the fact that you've owned it for a few years, so obviously you had the appreciation. But knowing your exit, obviously very important regardless. Because you make your financing decisions based on that and a whole bunch of other things based on that. So we want to get really clear on what this stuff is going to sell for.
Yep. Yeah, absolutely.
Okay. All right. Any other questions on the feasibility before we wrap that section up?
No, that's pretty, I think it was pretty detailed. Seems like it's covered all bases from what I can tell, but I guess there's always going to be the unknowns. And until we start asking some questions and making some calls, I think that's where we're going to get into the weeds a little bit more.
Yeah. Actually, one of the things that, now I'm just going to test this here. So one of the numbers that I tell people when you're doing back of the envelope numbers, which is really powerful when you're trying to find sites for a 1 and a 2 subdivision, these days, it's typically 250 to 300,000 back of the envelope number for a 1 to 2 subdivision. Now that includes everything. That includes stamp duty, construction, agents, commissions, GST, everything. The idea is that you can go, I bought it for 300,000. It's going to cost me 250,000 to do. So my total cost is 550. So if I can sell them for 400,000 each, I'm going to make 250,000 profit. That sounds good. Now that's designed for properties in a price range of 500 to a mil. Obviously this was purchased at a lower purchase price, which is great, but let's just have a look at that. So we've got 275,000 and we've got a total cost of 555,000. So let's just do the exact math on that. There you go. Back of the envelope numbers still running true. But the real lesson here is look at the price point that this is bought at. And I tell people how conservative this number is. When your price point goes up, your stamp duty cost goes up, your holding costs go up, all those things go up. So this is just an example of how conservative those back of the envelope numbers are. So, really back of the envelope numbers for a 1 and a 2, I'd say $275,000 to 300,000 easy. So that's a good example of that. Okay, we better wrap this up because we've gone over an hour. So homework for you. What have you got? Let's get rid of that screen and we'll bring up the notes.
So the starting point is really the first questions for the town planner.
Yep.
So that's where I'm coming back to you. So I'll call the town planner. What's the first thing I kind of ask?
Yep, very good. Okay, so the 3 consultants that you're going to engage from this point are your town planner, your civil engineer, and your surveyor. Those 3. Now, the town planner, we start this conversation off really simple with the town planner and the engineer. Town planner is quite literally, look, here's the address, give them context. I already own this property. This is what I would like to do. Provide them a mud map of it. Doesn't need to be fancy. Just use satellite footage, put a line across where you want to do the blocks. Just give them the context of what you're wanting to achieve. And just let them know, look, number 1, do you see this as possible? Do you see any potential risks? Do you see any potential opportunities? That's it. I prefer to leave it quite open-ended when I'm getting them started because I actually want to trigger them to think creatively. I don't keep it closed. That's why I say, what are the opportunities? What are the risks? And it's more or less the same question for your engineer. Now, if there are risks you know of that you want information on, which we have identified a few here, outline those. Look, here are risks, or here are things that I'm already aware of that I'd like your input on. What other risks and opportunities can you see? And
right, and that'll be just from the engineer onwards, or also for the town planner once they've given their initial scope.
Most of all, so what have we got there? We've got off-street parking, town planner question, street trees, town planner, speed bumps and drains. That's more of an engineer question. Intersection is an engineer question. Yeah. Dial before you dig. Obviously, you're going to do a dial before you dig, but your engineer is going to look at the servicing side of things. And the backyard trees is a town planner.
All right. And will I be engaging an engineer straight away as well, or just wait for feedback? Okay.
Yes. Yeah. So whenever I've got a site that I think I'm moving ahead with, the first two people that I talk to is my town planner and my engineer. From a town planning perspective, I want to know what's possible. And from an engineering perspective, I want to know what they see that I don't see. And
to them, you just give them the same scope as the town planner. So this is the mud map of what I want to do. What can you tell me?
Yeah. What are the risks and opportunities you see what they come back with, and they're going to then go and have a look and go, okay, here's the servicing. What could be the challenges? Here are solutions, et cetera, et cetera. The other reason, so from a due diligence perspective, you want to deal with both of them at the very beginning anyway. But the civil engineer actually needs to prepare a report for the town planner to be a part of the DA application, because they need to at least demonstrate at a concept level for council that it can be serviced. It's not a detailed plan. It's literally just going, here's what we think should work. Here's the basic idea. Once you get the DA, then your engineer has to create detailed plans that can actually be constructed. And that's where they get into, we're using this pipe. It's going to be at this angle. It's going to be, this location, this type of fitting, very specific stuff. That's what's required for the operational works approval, but we don't need to worry about that just yet.
Okay.
Surveyor. Now, if this was a site you were looking at buying, I would say you didn't need to get a surveyor just yet. You'd go through all of this due diligence stuff first. Then once you were sure, or you were sure in all other regards, then you'd get the surveyor. Because you've already bought this property, you may as well get it done. So engage the surveyor, let them know that you plan to do a 1 into 2 subdivision, and that you need a detailed survey plan.
All right. Even before, simultaneously with the town planner and civil engineer, because I don't see any real issues with not being able to get it done.
No, there's nothing there suggesting. And look, the reality is your town planner or your engineer are probably going to come back to you within 48 hours. Your surveyor's not likely to get out there that fast.
All right. And that's it. Just a detailed plan of the lot.
Yep. And tell them your intended purpose. So that way they're clear on what they're doing it for. They've got the context.
Cool. Easy done.
All right. Okay. So that's on that side of things. The other homework is your sales. So I know you became an area expert before you bought this, but the market's changed. So dive into that again and become the area expert again as to what's happening in the market. Get your finger back on the pulse, not just what's reported on realestate.com and what's reported on RP data or price finder. You want to know the stuff that other people don't know yet because it hasn't been reported yet. What sold last week, which won't be reported for 3 or 4 months. Even better is what's gone under contract but hasn't actually gone unconditional yet. That's when you've got your finger really on the pulse of the market, because then you know what shifts are occurring and where the market is at really at the moment.
Yeah, absolutely. All right.
Best ways of doing that: open homes, calling agents, meeting with agents.
Good plan. That's, I guess, the best way to keep the finger on the pulse.
Absolutely. Well, mate, that's it from me. Any other questions from you?
No, that was fantastic. I mean, it seems like a lot going through it, but just taking a step back, really, it's getting the initial concept right, or at least looking to make sure the lot is feasible, and then a couple of phone calls, really, from what I can tell.
Yeah. Well, that's it. And look, obviously at the end of the day, that's meant to be the idea of the coaching, adding value is I can give you all the context, but then just go, this is the stuff you actually need to do now. We've kind of identified some risks. We've identified some opportunities, certain things that don't need to be worried about on this site, and boiled it down to here are your action items. So now you've got your next steps forward.
Yeah, fantastic. Thank you very much. Been very, very helpful, because no doubt it would take countless hours trying to figure out each one of these pieces of the puzzle, with a lot probably going missed.
Awesome. For the guys that are on live, feel free to throw in a comment or anything if you've got any questions before we sign off, and happy to answer them. Because otherwise, that is episode 1 done. And you got plenty of homework to do. So for those guys watching live, We haven't set this up in a way that there is a scheduled episode every week necessarily. Hey Geordie, good to see you. So what we'll do is we'll be posting when the next episodes will be, because as developments happen, there are times where there's lots happening where we might have weekly episodes. And then there'll be other times where we're waiting for council, where there might not be much to talk about. So basically, we will provide updates on the social media as to when the next episodes will be. So I would expect the next episode of this will be in the next few weeks. I'm going away skiing for a week, so it won't be then. But we'll be doing it soon enough, so we'll keep you posted. So make sure you subscribe on YouTube and Instagram and Facebook, so you're kept up to date with all of the updates and when the next episode will be. We'll see you soon.
Cheers. Thank you.
Thanks, mate. Bye.